whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Just another day in the circus, I guess. You heard Trump right there say that he has no intention of firing Jerome Powell. We have huge news coming from Scott Bessent and a closed-door meeting where he said that the path that they're taking with China is unsustainable. Trump also mentioning that the tariff on China will not be 145% and it will come down substantially, but won't be zero. Tesla just reported earnings a couple of hours ago as of the time of this recording. And even in this environment, in this economy, Netflix hits an all-time high. We also had an absolute monster on gold as gold hit an all-time high as well. I'll get into that trade and tell you why I did that. And of course, I'll give you my market outlook considering the news today. Let's get right into it. So as I said, President Trump said that he has no intention of firing Jerome Powell. Obviously, we all heard his comments where he was threatening to fire him, where he said that he can fire him if he wants, where he was looking into firing him. Now, I want you guys to understand something. Trump can make the stock market pump any given day, any day that he likes. He can make the market pump, and he knows that. But when you see Trump pull back, I want you guys to take a look at bonds. This is the 10-year yield right here. The reason that you hear Trump pulling back, when he starts pulling back, it's not because the stock market is dropping. It's because bonds are rallying in panic based on what he said. When there's extreme panic in the market, bond investors don't want to tie up their money in bonds, and they require a higher yield from bonds before tying up their money. And that is why you tend to see bond yields rally as bonds are sold off in favor of higher yields until a little bit more certainty is restored in the market. So that is why you heard today Trump say that he has no intention of firing Jerome Powell. Just like when we heard of that 90-day pause on all countries except for China, here it's because the 10-year was going out of control. He even reiterated today, this is a transition period. He knows that it's going to get bad. He's not talking about the stock market per se, but again, it's the need for the government to try to bring down the 10-year yield. And you could see here, as thankfully Bessent is the one that is in control of these tariff negotiations and not Navarro or Howard Lutnick, those two absolute tools. And you can see here Bessent, who is the voice of reason, in my opinion, in the administration, saying that the China de-escalation is necessary as the situation is unsustainable. That gave a bit of relief to the bond market. I'll be interested to see if it does have lasting effects. But if they cannot bring down yields naturally, then obviously a recession is the only thing that is going to bring down yields. And at that point, the Fed will print money again and start buying assets and throwing it on their balance sheet. Now, before I get into the market outlook and talk about Tesla earnings as well, I want to go over this absolute monster gold short here with you, even as gold hit an all-time high. And I'm going to show you how I use data as well as technicals in order to frame my trade. So if we look at GLD here, you can see my alert from yesterday, but I was going off of this data here. And what this data showcases is that gold, when it is at an extreme overbought level, in this case, overbought is defined as the percent distance from the 200-day moving average. There haven't been many times that gold was almost 30% above the 200-day moving average. But almost every time that it has happened, look at these stats here. These are the stats I love as a trader. So I ended up buying the 315 at the money puts expiring in a month on GLD. And I was looking at the intraday gold futures chart because it trades 23 hours a day, so it's more contiguous. And I was looking for this pattern, which is called the market maker sell model. I love when this pattern forms because it is a very clear pattern that goes from one end to the other, and you could take broad trades in that regard. I still have half of those puts open waiting to get to that 3,300 level on the gold futures, and I also day traded this in futures today as well. So we double dipped, triple dipped on gold. Was an amazing trade combining data plus technicals. And then the ability to trade this with options as well as futures is another area that I think we excel at in terms of versatility. If you want to trade live with me every single day, link is in the description below. And let's get right into Tesla earnings. So Tesla here, trading at 250 after hours. It closed at 237. The interesting thing is Tesla actually missed on earnings and missed on revenue. However, think about this. Tesla already reported its deliveries, and we knew that Q1 would be terrible. So the fact that it was still trading in the low 200s, the market obviously digested the bad news from the car business. And right now, what the market is doing, whether you think it's correct or not, is they are valuing Tesla as a robotics and AI company. They don't care about cars anymore, which is crazy because Tesla makes 90% of its revenue from cars. However, Tesla investors are very forward-looking, seemingly. And so they're envisioning a future in which that is not the case anymore. Now, if they hit on all their deliverables, I do think that Tesla does have a very bright future in AI and robotics. So on the conference call, obviously, the couple things that people wanted to hear is their robotics and AI updates, but also when Elon Musk is going to come back to work. I think investors at large are getting really tired of Elon being distracted and not 100% on Tesla. As I said before, I don't think that type of leeway would be given to anybody else. So on the conference call, Elon Musk said that he admits that there's been some blowback due to his time away from Tesla and that he's aware of it, which I guess is great if you acknowledge it. And they kept touting this Model Y being the best-selling car in the entire world, not EV, but car out of any car. He also said that much of the grunt work is done at Doge and that he's going to be spending a lot more time at Tesla next month and that they are still looking to release autonomous driving in Austin in June. He said in terms of Optimus that they expect to be producing 1 million units per year within 5 years, though maybe just 1,000 or so this year. And honestly, that's really it. And so you could see that the stock price jumped, what is that, $13 after hours, even though they missed on earnings and revenue. But like I said, the car business, the pitfalls of the car business, I think that was already priced in because we already got the deliveries. We knew that deliveries were down all across the board, not only in Europe, but also in the US now. So it's really hanging its hat on this future. Now, we have seen some companies like Meta, for instance, that have completely shapeshifted their business, and it has helped them, and they've actually done it really successfully. All right, market outlook time. As of the time of this recording, you could see that the market is loving those comments by Trump and by Bessent. Basically, a softer approach on China tariffs for now, right? They keep obviously flip-flopping on that. But obviously, the fact that he's no longer going to fire Jerome Powell. However, is this enough to see a bottom? In my opinion, the fact that Trump mentioned that we're still in a transition, the fact that yields are still high, makes me logically conclude that the fight is not over. Like I said, if Trump wanted to pump the markets, I feel like he can pump the markets at any time he wants. He can end this whole fiasco. He can, say that the tariffs are done. We're friends with everybody. Let's print money and onward and upward, right? But they can't do that because yields are not going to go down if they do that. So I don't think that their focus is the market. I don't think that they want to save the market. As I said, I think their focus is yields because that is what they're telling us. So back to the market, yeah, I do think, as I said in my last market update, I do think that there is a plausible scenario that we trade back up to the Liberation Day gap. Now you can see that NQ did get to halfway through that gap, the NASDAQ, but ES didn't. So I could totally see price action taking us towards there. And as I said in my last video update, I will be looking to potentially take a short from here. And if I pull up the moving averages, you could see that we're still below the 300-day moving average, and the Liberation Day gap is right under the 300-day moving average. So to me, that still makes sense as an area to potentially monitor a short from. Now, we still have to get above this in volume imbalance right here, this gap right here, which in my opinion, I think we will easily trade into. But we have to close above that in order to get to that level. If we reject from here, then I think there could be, if we reject from here and shift market structure to the downside, I do think that there is a short that can be had from here. However, if we close above this, and I think the next logical level is that 300-day moving average at the Liberation Day gap. Now, if you look on the weekly chart in 2022, something very similar happened, right? We were oversold on the RSI. We rallied to the 300-day moving average and then dropped even further, which can happen here. If you look here, I can easily see a point at which we rally to the 300-day moving average and then drop further, creating sort of this double bottom on the RSI on the weekly. You could see the death cross in full effect here. Now, one thing that I find interesting is even during times when the death cross actually did bring the market down further, like in 2022, I don't think that we've ever had a death cross that we didn't go back and revisit. So even in 2022, we revisited it. Same thing in 2015, we revisited the death cross. Let me see if there's a time that we didn't. We revisited the death cross in 2011. So the only time, even in 2008, very surprising, we revisited the death cross. So I wonder if that is the same scenario that will happen here. This is the Liberation Day gap at around 555 on the SPY. I wonder if at that point the 200-day moving average will be slanted downward, and so will the 50-day, to where when we retest it, it will be around that area. That's something definitely to look out for. Now, one thing that I'm still looking at is the VIX term structure. This still is in backwardation. As I told you guys, the VIX term structure is supposed to look like this and not like this. This means that there is way more volatility up in the near-term future than in the distant future. This is how the VIX normally looks, which means that there's way more volatility in the distant future because we don't have a lot of knowns. There are way too many unknowns in the distant future. But right now the VIX is in backwardation, and I don't think that we can find a bottom while the VIX is in backwardation. And if the VIX continues to trade above 30, then I don't think that we have a plausible bottom. Now, aside from day trading and swing trading, which is an absolute gift in this environment, what stocks am I looking at these levels? I told you in the last video, I think that there's a couple of things that I want to highlight here, okay? In terms of when you buy, I think that it is a much more lucrative strategy in this environment based on what we've seen so far if you buy on the red headline days, okay? Now, for some of you newbies, this may take some practice, but I think you are much better buying when there are red headlines than when there are green ones, because we are going to continue to see this red light, green light, Squid Game type of shit, right? Where, tariffs are now 2,000%. Just kidding, they're 0. Just kidding, they're 100. Just kidding, forget what I said yesterday. Fire Powell. Just kidding, I never said that, right? You are much better off buying during the extreme fear headlines than you are during the extreme green headlines, right? There's no reason to be scared here because we already know what their objective is. They're trying to bring down yields. They are likely going to cause a recession while doing that. Unless they completely give up and say, screw that, turn on the money printer. We know what their objective is. There's no reason to be scared, especially if we know how to do technical analysis and rudimentary fundamental analysis. So here are my tips on what you should look at. One, I think you should, if you are going to buy something, I think you should wait for a red headline day and not a day where everyone's euphoric and says, wow, turn on the money printer. I think the bull market is back, guys. Like, I guarantee you there's going to be a lot of buyers tomorrow just because of the green day. Secondly, as I said, focus on defensive stocks that don't have a lot of tariff exposure. The Googles, the Metas, the Netflixes, the consumer staples, and even stocks that do have tariff exposure like Amazon or Nvidia. I think that a good rule of thumb is buying companies that generate so much cash they don't know what to do with, right? So a good metric that I like to use is a company that generates cash from operations that's roughly 10% of its market cap. So if you take a look at Amazon, I mean, today it pumped, but when it was trading in the low 160s, Amazon, if we look at its cash flow, its cash from operations is generating around 116 billion, right? Amazon's market cap is roughly 1.5 trillion. So it is generating a shit ton of cash. If we look at Google, again, roughly 1 point something trillion market cap, generating $125 billion of cash. Even if you look at a company like Exxon, right, is generating 55 billion in cash. I think its market cap is somewhere, it's around 455 billion. Now, obviously, those aren't the only metrics. I'm just giving you some ideas on how to look for safer defensive bets, right? Like, you still obviously are going to get into NVIDIA at some point. And it's not based on, are the cash flows generating 10% of the market cap? You're going to look at stuff like forward PE is 24, which is lower than its 5-year average, lower than its 3-year average, especially if the S&P 500 does come back and revert to the mean in terms of its PE valuations. At that point, any of the mega caps are really going to be fair game for the long term. Obviously, I make these videos to keep you up to date with the most current information in the financial and economic markets, and to also distill them, to analyze them, and tell you how I'm seeing it, but most importantly, to practically put it into practice with regards to trades and investments. And I try to drop some nuggets in here based on my experience on certain things that I look out for when I'm looking at trades, when I'm looking at investments. So hopefully you guys find that helpful. Give this video a big fat thumbs up. If you want to trade live with me every day, click the link in the description below to get all my day trades, swing trades, long-term, etc. If you are just a long-term investor and you are not a day trader or swing trader, there is a much more affordable tier for you as well. That link is also in the description. If you're wondering what platform I use to trade, I use Public. I use that for all of my options and stock trades. The coolest thing is they give you a rebate on all of your options trades. So sign up for a Public account below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace. Now, as I mentioned before, I've been using Public for my investing as well as my option swing trades. It's a regulated platform based here on the US. Now, we talked about commission-free trading and earning rebates for your stock and ETF options contracts trades, but they make it really easy to invest in bonds. It's not cumbersome. They actually have a bond account right now that pays 7%, giving you access to a portfolio of high yield and investment grade bonds. And if that's not enough, they have this AI assistant called Alpha. This is probably one of my favorite things on the app here. So I can ask it simple questions, right? Like, what is Tesla's free cash flows? And it tells me here that Tesla's free cash flow is reported at 2.742 billion, which represents a significant increase of 222.97% from previous figures. But I can ask it more complex questions like, compare NVIDIA and AMD. And it provides me comparative analysis between NVIDIA and AMD, going over its financials, its revenue, net income, EBITDA, free cash flow, gross profit margin, operating income, cash and equivalents, etc., etc. So it's very easy for you to get answers to questions before you make your investing and trading decisions. Use the link in the description below and get yourself a Public account today.